Let's talk about inflation numbers in the United States, which were out earlier this evening. There were expectations that inflation in the U.S. would moderate in April. This was evident in the fall in bond yields that you saw over the past couple of sessions. However, it turns out that the consumer price inflation came in higher than anticipated at 8.3% in April. It was pegged at 8.1. So while it has moderated from the 8.5% in March, it's still being seen as a bit of a disappointment, going down only marginally from its 40-year highs. This has to be seen in the context of the recent moves in risk assets and in treasuries in the recent past. Equity markets have fallen quite dramatically since the last Fed meeting, and they continue to remain under pressure. Core CPI, which does not include food and energy prices, have gained 6.2% higher than consensus estimates of 6%. Taking cues, Wall Street has remained volatile today in trade. The benchmark indices have been seesawing since the market opened this morning in the US. In fact, even the crypto markets are facing pressure, with Bitcoin sliding below the 30,000 mark at this for the second time this week. Meanwhile, all focus on inflation because the print for the month of April is also expected for India. And remember, last month, for the month of March, the print was as high as close to 7%. It was one of the reasons, as ET Now exclusively reported, that the RBI decided to go in for an out-of-cycle rate hike. The number that could come in tomorrow is a crucial one in this context. Let me go across now to Anubhuti Sahay, Head South Asia Economics Research at Standard Chartered Bank. Anubhuti, thank you so much for speaking with us here on the India Development Debate. Just your take on the expectations for tomorrow. What is the kind of number that we could see?
We are expecting a 7.5% CPI print tomorrow, a pretty elevated number, driven by first food prices. If you look at the broader spectrum of food, there is an increase in cereals, there is an increase in milk prices. Even on vegetable fronts, we are clearly seeing higher prices. So that should push food inflation to almost a high of 7.9%. Last time we saw such high numbers, it was back in November of 2020. On top of it, if you recall, April was the month when maximum adjustment happened between retail prices in India and global crude oil prices. So that would be another factor which is likely to push inflation closer to 7.5%. Core, including petrol and diesel, is likely to be at around 6.8%, up from 6.3% in the previous month.
We saw an out-of-cycle rate hike from the Reserve Bank of India, and one of the reasons to be believed behind that is the unexpectedly high March print that came out. Now, you're saying that the expectations for April are at 7.5%. Will that be in line? We're also learning, and news reports today, that the RBI is likely to change its projections for inflation in June. How do you see this panning out?
I think a couple of things which changed between the April policy meeting and the inter-meeting policy rate hike. If you look at that 1 month period, the big change which happened, one was on weather front, the intense heat wave. If you look at the April policy meeting, there was a lot more comfort about well-behaved food prices. Over a month's period, it was pretty clear that besides what's happening on crude oil, metals, etc., food prices are unlikely to play out the way RBI or MPC believed during the time of April meeting. So that was one of the big changes, and I think that theme remains intact going forward too. So can we see inflation staying closer to 6% or higher than that for most of FY23? That cannot be ruled out. Key determinant would be geopolitical tension, how supply chain bottlenecks finally resolve. Will China easing its policy towards COVID management? Will it, if there is any easing, will there be any resolution on that front? All these factors will be extremely crucial to watch from inflation perspective. The other factor which we also need to keep in mind is, besides inflation, is growth. Our view is that probably growth concerns globally might not be at the forefront at this juncture. But as we move towards the last quarter of calendar year 22, probably growth will also become a factor to be considered in the monetary policy reaction function. And inflation can remain high, that risk cannot be ruled out. Near term, RBI's or major central banks' reaction curve would be purely determined by inflation prints. But as we move further towards the end of 22 or early 23, growth will also play an equally, if not more important role than inflation while deciding the monetary policy rate trajectory.
So what are your estimates of how much further the RBI may hike rates?
We are looking at another 110 basis points of rate increases between now and end of December 22. So the repo rate by end of December 22, according to our forecast, is 5.5. As I mentioned, in the near-term policies, probably we can see more aggressive action. We saw 40 basis points of rate increase in May, and our view is that we will see another 35 in June. If the CPI surprise is even, is worse than what the market is pricing in, then maybe, we might again see a 40 basis points hike. But in the remainder of the three meetings, our sense is we are likely to see 25 basis points of rate increases in each of the three policy meetings. Again, as I mentioned, the risk is that more can be front-loaded rather than back-loaded, given the concerns about inflation at this particular juncture.
All right. Thank you so much for that, Anubhuti Sahay there, with her take on what we are expecting to see from CPI inflation numbers tomorrow and the consequent possible action from the Reserve Bank. Thank you so much for joining us.